Everyone to this webinar hosted by IMT Care. Let's welcome Nikita with over 6 years of experience mastering the financial game at top tier Big Four consulting firms. So without further ado, let's welcome her. Over to you, Nikita.
Yeah, hi everyone. This is CA Nikita Jindal, and I'm having 6+ years of experience with Big Four Consulting. So thank you all for joining this session. And we will be covering 5 topics in this session. Number 1 is how income tax slab works under old tax regime and new tax regime. Number 2 is the importance of basic components, which is important for a tax calculation. Number 3 is ATC deductions. Number 4 is deductions other than ATC, which is important for you to know. And number 5 is how your family can help you in save a lot of taxes. So I think we can start. So let's start it with this income tax slab. So you all are aware about the new tax regime and old tax regime. So we will talk about how the income tax slab works under the old tax regime. So if you are an employee having ages less than 60 years, so there's a deduction you have an exemption limit of 2,50,000, and above 2,50,000 to 5 lakh the slab is 5%. 5 lakh to 10 lakh, the slab is 20%. And above 10 lakh, the slab is 30%. And if you are individual having more than 60 years of age and less than 80 years of age, the exemption limit is 3 lakh instead of 2,50,000. And rest, all the limits are same. And if you are super senior citizen having more than 80 years of age, the exemption limit is 5 lakh. And rest, all are same. So I believe I'm clear with this. So this is under old tax regime. And if I can talk about the new tax regime, so up to 3 lakh, so the exemption, the limit is 0. So and under old tax regime, the basic exemption limit is 2,50,000, but under new tax regime, the exemption limit has been increased to 3 lakhs. Okay. And the slab works like this. Like in between the salary income in between 3 lakh to 6 lakh, the slab is 5%. In between 6 lakh to 9 lakh, the slab is 10%. In between 9 lakh to 12 lakh, the slab is 15%. And 12 to 15, it is 20%. And above 15, it is 30%. But there's a catch. So if your income is up to 7 lakh, if, for example, if your income is 6,50,000, so you will get the rebate. So you have to pay 0 taxes. Okay. So I would suggest if your salary income, like the net taxable income, is up to 7 lakhs, so you can consider new tax regime rather than old tax regime, because you can get the entire rebate and you have to pay 0 taxes. So I hope I'm clear with this. So we will take all the question and answer in the end of the session. So yeah, and for the salaried employee, you have a choice to choose whether you want to opt for old tax regime or new tax regime in the starting of the financial year. So that is the biggest advantage for the salaried employee. So you can change your income tax regime every year according to your preferences. So please do consider this. Do select the, choose the income tax regime according to your preferences, like what is best for you. And you also know that under the old tax regime, you can avail a lot of deductions, but under new tax regime, there's no deduction available. So if your income is 7 lakh, up to 7 lakh, new tax regime is best. But if your income is more than 7 lakh, so you have to consider what all deductions you have and what is the best tax regime for yourself. And you have to choose accordingly. And this you can do every year. Now let's start it with to understand the basic component of the salary for the tax purpose. Number 1 is HRA. So you all have received HRA under your salary component. So basically I believe this is offered by each and every organization. So if you are living in a rented house, you can claim HRA. But if you do not live in rented house, you cannot claim HRA. So for example, if you are receiving HRA, for example, 3 lakh, and you do not pay any rent, so you have to pay taxes on the 3 lakh. But if you are receiving HRA of 3 lakh, but you are paying your rent as well, so you can claim the exemption. How do you claim the exemption? We will cover in the next slide. So there are 3 criteria for claiming exemption. Number 1 is actual HRA received. So whatever the HRA you are receiving from your employer, for example, I would say if you are receiving 3 lakh as HRA from your employer. So in the first, we will take 3 lakh HRA if you are receiving. Number 2 is actual rent paid minus 10% of your basic salary. For example, you are paying rent, for example, 20,000 per month. So your per annum rent is 2,40,000. So you have to do this 2,40,000 minus, I would say your basic salary is 2 lakh. So 10% of 2 lakh is 20,000. So 2,40,000 minus 20,000 is 2,20,000. So in the first scenario, your actual HRA received is 3 lakh. In the second case, the calculation is 2,20,000. And third case is you have to do this 50% of basic salary if you are living in metro cities, or 40% of basic salary if you are living in non-metro cities. I'm assuming that you are living in the metro cities. So your 50% of basic salary, so I assume basic salary is 2 lakh. So 50% of 2 lakh is 1 lakh. So here in the first one, the actual is 3 lakh. The second is actual is 2,20,000 and the third is 1 lakh. So least of the three. So basically I can claim exemption of 1 lakh rupees. So I believe I'm clear with this, then how this HR exemption works and how you can take the best advantage of it. Just a sec. Now let's talk about leave travel allowances. This is the allowances which are offered by not many of the organization, but yeah, some of the organization offer this leave travel allowances. So if you are receiving this leave travel allowances under your salary, like as a salary component, then you can claim it as a like exemption. How do you claim it? So basically, this exemption is applicable only on the actual travel cost. Like whatever you are doing travel by air, by rail or bus, then you can claim it as an exemption. But do consider this, you cannot claim exemption on your local conveyance, sightseeing, hotel accommodation, food, etc. This is for your travel exemption, not for anything else. So do consider this. This is applicable only on the actual travel cost which is incurred by you. Okay. And number 2 is 1 minute. Yeah, this is only for the domestic travel. You cannot claim LTA for the international travel. So this is also very important. Please keep a note of it that you can claim only on the domestic travel. And number 3 is, so LTA exemption is available. Like you can claim 2 LTAs under 4 years. So basically, like currently we are under the block of 22 to 25. So you can claim only 2 times LTA, like only 2 times of your travel journey under this block. Okay, so these are these 3 key factors which you need to consider while claiming LTAs. And I can explain with the help of example. For example, you are receiving leave travel allowances, say 2 lakh from an employer, and your actual travel cost is 1,50,000. So you can claim LTA only up to 1,50,000 because obviously you have to submit all your bills to your employer. So you can claim it. So whichever is less, you can say. Okay. Number 3 is Provident Fund. So Provident Fund, I believe you all are aware about the Provident Fund because it is very normal. So you have to do this 12% of your basic salary. So whatever your basic salary, 12% is deducted as an employer contribution and 12% of your basic salary is deducted as an employer contribution. Okay, so whatever the employee contribution, you can claim deduction under Section 80C as an employee contribution under the Provident Fund. And whatever the employer contribution, obviously you cannot claim deduction, but it is exempted from the tax. Okay. So these are the 3 basic important components which I believe you have to understand for your tax purpose. Now we will talk about ATC deductions. So the best ATC deduction is ELSS fund, that is equity linked saving schemes. So it is a tax saving mutual funds which is considered as the best saving options because the lock-in period is just 3 years. And also we have seen the best returns as compared to FDs, PPF and NPS. So obviously you can consider this. The limit of ATC deduction is 1,50,000. So since it is a March, so you can start planning your taxes since the last date is 31st of March only. So this is the best option which you can consider. And you can save up to 46,800 taxes using this ELSS funds. And other than ELSS fund, there's a tax saving FDs. So the lock-in period is 5 years. Again, you can invest in under tax saving FDs. The limit is 1,50,000. And you are aware that the rates are in between 5 to 7% FDs. So you can do accordingly. The other option is public provident fund. This is also a very good option. It is obviously it is backed by government, so there's no risk involved. And the lock-in period is 15 years. And also you can like extend it further by 5 years. And also partial withdrawal is possible after 7 years. Okay, and the investment limit is a minimum you can do is 500, maximum you can do is 1,50,000. And the interest is also tax-free. The other one is EPF. It is also an employee provident fund, which we have already talked about. So this is about 12% of basic salary. So obviously you can claim deduction under section 80C. And the other one is National Pension System, that is NPS. So we can claim deduction up to rupees 1,50,000 for NPS under section 80C. This is also a good option. This is something which who are planning for their retirement, they want a fixed pension, so they can consider this. This is also a very good option. So the most common is the life insurance premium. So under 80C, so you can like whatever the good insurance premium according to your need, you can consider this and you can invest in a good life insurance premium and you can claim deduction under section 80C. And the other one is the repayment of home loan. So basically, if you have taken a home loan, so whatever the principal amount which you are paying as a repayment, so you can consider like deduction under section 80C up to rupees 1,50,000 for this repayment of home loan. So these are the some common like 80C deductions, I would say. I will just go through this quickly again, so you won't get confused. So number one is we have covered is ELSS fund. Number two is tax saving FDs. Number three is PPF. Number four is EPF. Number fifth is NPS. Number six is life insurance premium. Number seven is home loan repayments. So there are other options also, but I have covered only those options which is important for you to know and which is the most common options under section 80C deductions. Just a sec. Then we will cover about those, like everyone is aware about the 80C deductions, but what about those deductions which are other than 80C deductions, and many people are not at all aware about this. So let's cover about other deductions other than 80C deductions. So number one is 80CCD subsection 1B. So basically we have talked about national pension scheme. So overall you can claim up to rupees 2 lakh deduction under NPS. 1,50,000 is covered as a part of 80C deduction, and rest 50,000, which is over and above 1,50,000, you can consider under section 80CCD. So this is the best if you want to do this NPS, because you are getting overall 2 lakh limit for this NPS deduction. Okay. And the 80D deduction, so basically 80D is a Mediclaim insurance premium. So obviously you all have taken a good Mediclaim policy for yourself and your family. So you can claim that Mediclaim premium under 80D as a deduction. So if your age is less than 60 years, you can claim up to rupees 25,000 as a Mediclaim deduction. And if you are over and above 60 years, this deduction is you can claim up to 50,000. And the best part is you can claim for yourself as well as your dependent parents. So basically, if your parents' age is again less than 60 years, you can consider 25,000. And if your parents' age is more than 60 years, you can consider 50,000. So overall, you can consider for yourself as well as your parents. For example, if you are less than 60 years, so your deduction would be 25,000. And if your parents is more than 60 years, so their deduction is 50,000. So basically, you can consider 25 plus 50,000, 75,000 you can consider under section 80D. So this is a very good investment option. And also it is also medical insurance is very important as an individual. So you can also consider this. And the rest we will cover about this section 24B, that is whatever the interest you are paying under home loan. So basically the principal amount, like if you have taken a home loan, so the principal repayment is covering under section 80C and the interest payment is covered under section 24B. The maximum deduction you can claim is 2 lakhs. So basically if you have taken a home loan, so you can claim to 3,50,000, 1,50,000 under section 80C and 2 lakh under section 24B. So that is also a very good option. So if you have if you are planning to take a home loan, or you have already you have a home loan, so you can consider these sections for claiming best deductions. Other than this, section 80G, so that is the donation. So if you are doing any sort of donations to the charitable organization, you can claim deductions under section 80G. So there are two types of deductions, 50% of the amount paid or 100%. So for example, if you have made the donation of 1 lakh, so there's a section where you can claim 100% deduction, that is 1 lakh deduction you can claim under section 80C. Or there are sections you can claim only 50% of the deduction. So whenever you are doing any donations, you have to see like in which sections this is applicable. Okay. So that is like 100% or 50%, two types you can claim. Just a sec. Other than this, section 80DD. So basically, these are the whatever the medical expenses incurred for the handicap dependent, you can claim it. So the deduction limit is 75,000 if the person with the disability is between 40 to 80%. And the deduction limit is 1,25,000 if the disability limit is more than 80%. So you can consider this. And other one is section 80E, that is interest payment on the education loan. So basically, if you have taken any education loan, so you have to pay interest. So overall, whatever the interest you are paying, no, it is like you can claim 100% deduction. So the deduction limit is like there's no limit of the deduction. You can claim 100% of the interest as a deduction for the education loan. So this is very important for you to know this. You can claim like if you are planning to take any education loan or you have already taken it, so you can also consider this. So let's we just go through it again. We have talked about the NPS. So overall NPS is having 2 lakh deduction, 1,50,000 you can claim under 80C and other 50,000 you can claim under 80CCT. Other one is 80D, that is the mediclaim insurance. Okay. Other than this, like section 24B, that is interest payment on the home loan. And other than this, 80G, that is donation like for the charitable organization. Other than this is 80DD, that is whatever the medical expenses you are paying for this handicapped individuals. And the other one is 80, that is like interest payment for the education loans. So other than this, we will cover about how your family, as in how your parents, how your spouse, how your children can help you to save a lot of taxes. So if I talk about your parents, so number one is you can invest in their name. So for example, if your parents is over 60 years, so they can claim higher exemption limit, that is 3 lakh. That is 3 lakh. And in your case, it is 2,50,000. So number one is they can claim higher exemption limit. So you can invest, you can park your fund, you can gift your fund to your parents, and you can invest in their name. So basically, they can get, number one is higher exemption limit, and number two is the interest income is also exempted. So if your parents' age is above 60 years, 50,000 is exempted. So obviously there are two benefits. You can claim higher interest exemption. Number two, you can claim higher exemption limit. You can enjoy it. Okay. So most important is to invest in their name. And number two is, this is most common, that paying rent to your parents. So basically, if you are living with your parents, okay, so you can pay them rent. So, but the thing is that there has to be a proper agreement, okay, between you and your parents. And number two is, you have to do a monthly transfer of your rent to your parents. So it has to be legitimate, okay. And number three is, you have to file your parents' return also. And whatever you are paying as a rent, it has to be reflect as an income in their income tax return. So the transaction looks like a legitimate. Okay. So what is the advantage? So if you are paying rent to your parents, you can claim HRA. Okay. And also your parents, also in the books of your parents, they can claim, obviously there's a rental income in the books of your parents account. So they can claim 30% deduction on rent income under section 24. So basically both are having a good advantage of it. Okay. And post that is a good health insurance policies. So if you are investing, like if you are investing in a good health insurance policies, you can claim exemption of 25,000 and 50,000. So if your parents' age is less than 60 years, you can claim 25,000 as a deduction. And if their age is more than 50, like 60 years, you can claim 50,000 deduction. So this is also a good option. So these are the most common things which you can do in your parents' name, and you can get the best advantage of the income tax. Number one is invest in their name. Number two is paying rent to your parents. Number three is invest in the good health insurance policies for your parents. Okay. And the other one is just a sec. Other one is save taxes with the help of your spouse. So the number one is you can take joint home loan to double your tax benefits. So basically, if you are taking a home loan, you are getting 1,50,000 like deduction for the principal repayment under section 80C and 2 lakh for the interest repayment. So if you are investing, like if you are taking joint home loan with your spouse, so you are getting double benefits. That is, instead of 3,50,000, you will be getting 7 lakh ka benefit if you are doing this. So this is what I have written, like 1,50,000 each. Like for example, if I have taken a home loan with my spouse, so I will be getting 3,50,000 benefit, and also my spouse will be getting 3,50,000 benefits. So overall, we will be getting 7 lakh combined tax benefits. So you will be saving a huge lot of taxes while doing this. Okay. Number two is buy health insurance. So obviously you can buy a good health insurance and the deduction is up to rupees 25,000 if your age is less than 60 years, and the deduction is obviously 50,000 if it is more than 60 years. And also buy joint life insurance. So it will be covered under section 80C. So the deduction limit is 1,50,000. And the last one is save taxes with the help of your children. So number one is you can invest on the name of adult children. Okay. So basically, if your children age is less than 18 years, so he and she will be considered as a minor and their income will be clubbed under your income. But if your children age is more than 18 years, so it will be considered as a separate individual entity for the income tax purpose. So you can invest in their name, and you can do, so basically if you invest in their name, you have your own exemption limit of 2,50,000. Your children is also having a exemption limit of 2,50,000. So you both have you both can enjoy a good savings. Okay. So you can do this, like what the concept which we have learned under this parents wala concept. Okay. And number two is tuition fee paid for the children. So you can pay like whatever the tuition fee you are incurring for your children, you can claim deduction under section 80C up to rupees 1,50,000. Okay. So let's revise it quickly, whatever we have learned. Yeah. So basically, we have learned about the income tax slab rates under the old tax regime and under the new tax regime. Okay. The basic thing is that under old tax regime, you are getting exemption limit of 2,50,000, and under new tax regime, you are getting the exemption limit of 3 lakh. And we have also learned that if your salary income is 7 lakh, New tax regime is beneficial for you, but if your salary income is more than that, so you have to do your own analysis and you have to see how many deductions you are having. If you are having more deductions, so obviously definitely old tax regime is better for you, because under new tax regime, you cannot claim any deductions, whatever we are talking about. Okay, so you have to do your own analysis about old versus new tax regime. And the best part is that for a salaried employee, you can think every year, like in which tax regime you want to opt in, whether new tax regime or old tax regime. Okay, then we have learned about this basic components. Number one is HRA. So obviously you can claim HRA if you are living in a rented house. So how you can calculate HRA? So there's three things. Number one is actual HRA received. Number two is actual HRA paid minus 10% of basic salary. Number three is 50% of basic if you are living in a metro, and 40% if you are living in a non-metro. So whichever is less, you can claim as a HRA. Number two is leave travel allowances. So just remember, it is on the actual travel cost by air, rail, or bus, and it is on only on the domestic travel. No international travel is allowed. And in the block of 4 years, you can claim max two LTAs. And number three is provident fund. So basically, employer contribution you can claim as a deduction under section 80C, and employer contribution you like it is exempt from. There's no deduction, but it is exempt from the tax. Okay, and then 80C, the most important is like the useful is the ELSS funds. Other than this, we have talked about this tax saving FDs. We have talked about this PPF. It is good also. It is government backed, and there's a lock-in period of 15 years, but obviously you can do this partial withdrawal. And EPF is also good. NPS is good because you are getting 2 lakh deductions, 1,50,000 under section 80C, and over and above 50,000 you are getting under NPS. The life insurance premium, which is the most common, where you can invest. Repayment of home loan. So home loan also is good option because you can do this repayment wala deduction under section 80C and the interest section under section 24B. Then we have talked about this deductions under that other than 80C. So the number one is NPS. You are claiming like more than 1,50,000, like over and above that is 50,000. So yeah, and the other one is 80D, that is a life health insurance premium for yourself and your dependent parents. Other than this, interest payment on the home loan under section 24B. Other than this, donations made to the charitable organization. Then, like if you are doing any sort of medical expenses for a dependent parents, you can do this under section 80DD, 75,000 and 1,25,000 depending on the disability percentage. And if you have taken this education loan, then you can like 100% you can claim as a deduction interest cost. Okay, then we have learned about how you can save a lot of taxes with the help of your family. So number one is like with the help of your parents, you can invest in their name. And number two is paying rent to your parents. But we have talked about this. The important is to create a rent agreement. You have to monthly transfer of the rent to your parents, and you have to file the return of your parents as well. And number three is buy health insurance, a good health insurance, because obviously you are getting benefit out of it. Then how your spouse can help you in tax savings. Number one is like you have to take a joint home loan to double your tax benefit. So you can 3,50,000 you can claim, and 3,50,000 your wife can claim as a deduction. So overall 7 lakh you can claim. Buy a good health insurance. You can claim 25,000 and 50,000 depend. Buy a joint life insurance, deduction up to 1,50,000. And like how your children can help you in savings, you can invest in their name, and obviously tuition fees paid, you can also claim deduction under section 80C up to rupees 1,50,000. Yeah, so guys, thank you so much for joining this session. So like this is my Instagram account, ca.nikitajindal. So I'm creating content for personal finance, career growth, and also if you are guys interested, do join it. And if you have any questions, this is my mail ID, ca.nikitajindal@gmail.com. You can easily mail me. And this is my WhatsApp channel, Wealth Wisdom by CA Nikita. This is my YouTube channel.
Oh, Nikita, I think we'll take some of the questions for now.
Yeah.
We still have a lot of time.
Yeah,
Okay,
yeah.
I'll read out the questions for you.
Yeah,
Or do you want to read it yourself?
No, even I can read.
Okay, no problem.
Yeah, so Sagar has asked, old tax regime is best, right? So Sagar, again, it depends whether old tax regime is good and new tax regime. So if your salary, if your income is, you can say 7,50,000, because 50,000 you will be getting as a deduction, standard deduction. So if your income is up to 7,50,000, new tax regime is the best. Okay, but if your income is more than that, and if you have a proper deductions, like if you are having 80 ka full deduction, 1,50,000, you are having 80 ka deduction, you are having home loan. So these are the deductions which you can claim under old tax regime, and these are the deductions you cannot claim under new tax regime. So you have to do your own analysis, which tax regime is better for you. Okay. So I cannot say old tax regime is better. It depends on person to person which tax regime is better. I hope I answered your question, Sagar. The next one is, can you share the presentation? So Ritika, it is up to you. Like, I'm not sure whether we can share the presentation.
Yeah, I'll share the presentation.
Yeah. Oh, Ritika will be sharing it. So other one is, can you explain tax slab? We didn't know about topic. Okay. 1 minute. Let me explain it again. Okay. So basically, this is under old tax. Guys, just a sec. Yeah. So this is under old tax regime. So if you are individual having like age is less than 60 years, so basic exemption limit, that is the limit where you do not have to pay any taxes. It is 2,50,000. Up to 2,50,000, you have to pay zero taxes. Okay. Up to 2,50,000 to 5 lakh, you have to pay 5% taxes. Okay. From 5 lakh to 10 lakh, you have to pay 20% taxes. And above 10 lakh, you have to pay 30% taxes. So for example, if your income is 15 lakh, okay, so like 2,50,000 is exempt, initial 2,50,000. Between 2,50,000 to 5 lakh, you have to pay 5% taxes, okay. Up to 5 lakh to 10 lakh, you have to pay 20% taxes, and above 10 lakh, that is 5 lakh, like 15 lakh minus 10 lakh, that is 5 lakh, you have to pay 30% taxes. So this is how it works. Okay. So again, if you are a senior citizen, that is between the age group of 60 to 80 years, so the exemption limit is 3 lakh instead of 2,50,000, and rest all are same. Okay. And if you are super senior citizen, as in your age is 80 years or more, so the exemption limit is 5 lakh instead of 2,50,000, and rest all are same. Okay, this is under new tax regime. This is under old tax regime. And if I talk about the new tax regime, so the exemption limit is 3 lakh instead of 2,50,000. 3 lakh for all. Like if your age group is less than 60 years also, the slab is like the 3 lakh. Okay. So this is the best advantage under new tax regime, I would say. And the slab works like this. If you are having 3 to 6 lakh ka salary, this is 5%. If you are having 6 to 9 lakh ka salary, it is 10%, 9 to 12 lakh, 15%, 12 to 15 lakh, 20%, and above 15 lakh, 30%. Okay. So if you are if you are having salary of 18 lakh, so in between 15 to 18 lakh minus, that is 3 lakh. 3 lakh ke upar you have to pay 30% tax, and rest it works like this. So this is how the entire slab system works. So I hope I answered your question. Sagar. Okay. This is, sorry, okay, that is done. Can we get the recording? So Ritika, I believe you can answer about this, whether we like the participants can get the recording of this session or not.
I'll look into it.
Yeah. So that is done. 1 minute.
Nikita, I can read out the questions for you. It will be more easier for you.
Yeah, that is fine, Ritika. I'm fine with it.
Okay. So there's this question. A person with more than 25 LPA with no home loan, is new tax the best option?
Yes, that is the best option. If no home loan, new tax regime is the best option.
Okay. Is variable salary also included while computing taxes?
Yes. Your fixed and variable both are included while calculating taxes. Variable
Can you
as
show
bonus components and all. So everything is included while calculating taxes. When we calculate taxes, we are calculating on total, whatever you are receiving. So total, including fixed and variable.
Okay. Can you show us one best example how to save tax if our income is above 15 lakhs?
Okay, so if your income is above 15 lakhs, so I would say, so it depends. If you are having, like, for example, just a sec. So 80C में you are getting 1,50,000 का deduction. ठीक है, 80D में I'm assuming that you are like less than 60 years, so you will be getting 25,000 का deduction, and you are also claiming it for your parents. So 25,000 plus 50,000. So you will be getting this 75,000 का deduction under section 80C. ठीक है, I'm sorry, under section 80D, 75,000 you are getting it for yourself and your parents. 1,50,000 you will be getting it for this your like for all the under section 80C. And if you are having this home loan also, so you will be getting close to this 3,50,000 का deduction. ठीक है, so I believe it depends like how many deductions you are having it. So I cannot explain it, like it will take time because there are lots of deductions which an individual is getting it. So I would say like if you are, so what was the question? 15 lakh ka salary, right, Ritika?
Yes, yes.
So you can mail me, no? I will reply it over the email. Like I will provide the Excel file. ठीक है, जिसने भी पूछा ना, just mail me. I will provide that because it will take time. Like I have to do the entire analysis.
Perfect. Okay. Next question. I have declared 50K on NPS for the financial year 2023-2024. Will it be possible for me to invest in NPS this month, March, an amount of 50K?
Sorry, Ritika, come again. When the person invested on NPS?
So I have declared 50K on NPS for the financial year 2023-24. Will it be possible for me to invest in NPS this month, March, an amount of 50K?
Yes, yes, you can. You can till 31st March, you can invest it.
Okay. Next question we have. I have opted for a new regime, but my gross earnings crossed 10 lakhs. I do have a personal loan. I have my LIC. I am paying house rent. Is there any possibility to get back deducted money in ITR filing?
Yeah, you can. So basically for a salaried employee, no, like even like if you have declared like a new tax regime as for, like for your employer, so when you file your returns, there's again an option. You can again declare under old tax regime and you can reverse all your taxes. So you can do this. That is completely fine. While you file your ITR, just select old tax regime and everything will be calculated according to the old tax regime. And this can be easily done. Like even I have done this. So that is fine.
Next question. Can I change the tax regime from new to old?
Yes, yes, you can. You can.
Okay. I am 60 years age in new regime, but my income increased 12 lakhs. Can I go for old regime now?
Sorry, come again, Ritika.
I'm 60 years age in new regime, but my income increased 12 lakhs. Can I go for old regime?
So there is no perfect answer about this. So you have to do your own analysis, how many deductions you are having, like which is the best. There's no perfect answer whether old and new tax regime is better. So you have to do your own analysis and you have to decide which is best for you. If you are having more deductions, so obviously I would say old tax regime is best. If you're having if you're having no deduction, so obviously new tax regime is best. So you have to do your own analysis, but keep in mind that if your salary income is up to 7,50,000, new tax regime is best because you have to pay zero taxes. So that is the only shortcut, but you have to do an individual analysis.
We have next question. Please explain investment in parents' name.
Okay.
In simple words.
Okay, so basically parents are having, number one is they are senior citizen. Okay, so they are enjoying better exemption limit. So we are getting 2,50,000 का limit जिसमें हमें zero tax pay करना पड़ता है. ठीक है, our parents will be getting 3 lakh का limit. So if I am having a fund, okay, and I will gift these funds to my parents, ठीक है, and मैं उनके name पर if I'm investing in the any FDs and all, so whatever for example अगर मेरे parents का income है for example 2 lakh, ठीक है, और उनको FD से income मिल रहा है like जो मैंने invest करा उनके name पर and they are getting the like return from the FD say 50,000, so उनका total income हुआ 2,50,000, so they have to pay zero taxes on 2,50,000. अगर मैं उनको नहीं देती like if I won't transfer that fund to my parents and मैं मेरे नाम पर ही invest करती ना, then I have to pay taxes on it to 50,000 and here I have to pay no taxes. So this is the major differences. You have to segregate your funds, you have to give to your parents, so at least you can enjoy the tax benefits. And number 2 is, which I have explained, is like HRA. So if you are living with your parents, no, you can claim HRA. So, but the thing is that there has to be a proper agreement. So it looks like a legitimate, okay? And number 2 is you have to pay actual rents. It is not just that you are claiming it, you have to pay every month. You have to transfer it, and please avoid cash transactions. You have to do online transaction, okay? And number 3 is you have to file their return as well, because आप तो पे कर रहे हो but there has to be income in your parents account, so you have to file your income as well of your parents, so it will be shown as a like a receipt, rent receipt in their books of accounts. I believe I'm clear with this now.
Right. Next question. Will it require HUF account for joint home loan benefit?
No HUF account is required. You can claim individually.
Okay. Next question. Investing in ELSS mutual funds attracts short or long-term capital gains. In that case, LIC is better than mutual funds, as LIC returns not to attract the short or the long-term capital gains.
Come again, Ritika. I didn't get this.
Investing in ELSS mutual funds attract short or long time capital gains. In that case, LIC is better than mutual funds, as LIC returns not attract the short or long time capital gains.
So basically, देखो, it depends. If you want to, so basically ELS is a good option because I'm personally investing in it because it provides a good return because it invests in the mutual funds. Okay. So the thing is that there's no short-term capital gain. There has to be only long-term capital gain because there's a horizon of 3 years ka. Okay. So that I completely understand ki here we are getting this long-term capital gain and there we are not getting it, but it depends. Yeah, it depends on your like what kind of risk you want to take. Like whether you want to invest in a LIC, because in the LIC you will be getting low returns as compared to ELSS funds. So it depends.
Next question. If parent age is more than 75 years and not having health insurance, can I claim deduction of medical expenses incurred and how much?
So if your parents' age is like more than 75 years, so you can claim 50,000 deduction for under this under section 80D for Mediclaim. 50,000 is the limit.
Okay. Thank you. Next question. Are good investments included?
Ritika, your voice is so low, like I'm not able to hear you.
Hello, can you hear me now?
Yeah, now it's fine.
Okay, perfect. Next question. Are gold investments included in parents' name beneficial?
Yes, it is beneficial.
Okay. Next question. How to claim LTA while filing income tax return?
So basically for claiming LTA, you have to submit all your expenses, the proof of expenses to your employer. So if you do not submitting any proof to your employer and you are directly claim it under ITR, so definitely you will be receiving notice. So it's better. The best option is that firstly you have to submit all your actual investment in like whatever the expenses incurred under LTR to your employer, and it will be reflecting under form 16 salary. Okay, then it will be easy for you to claim it. If you directly claim it, then it will be risky for you.
Next question. If I invest on the name of my child whose age is less than 18, does it help in tax saving?
No, it doesn't help because it will be clubbed Under your name only. No, if you invest in your child A name, which is less than 18 years, so it will be clubbed, it will be treated as a minor, and it will be clubbed under your income only. So it won't be beneficial for you.
Okay, next question. Can we claim LTA for travel by rented cab?
No, you cannot claim.
Okay. Okay, next question. If my taxable income is less than 6 lakh, do I need to file an income tax return?
Yes, you have to file the income tax return for sure. Okay. But the thing is that you will be getting like there has to be zero taxes you have to pay, but you have to file the income tax return for sure. Because
Okay.
the exemption limit is only 2,50,000 and you are having the more than this, the exemption limit. So it is mandatory for you to file the return.
Okay, next question. Can you help with the process of investing in NPS?
So please, like this, it will take time. So you can mail me this. I have given my mail ID.
Okay. Okay, next question. I have a joint home loan and my wife is a co-applicant. However, the EMI is deducted from my bank account. Thereby, kindly let me know if me and my wife can avail the tax benefit of principal and interest paid.
Yes, you can avail. So basically, the condition is that there has to be a co-applicant. So in your case, it is like you and your wife both are co-owner, co-applicant, right? So you both can claim it. That is completely fine. You have a proof and you can claim it.
Okay. Which tax regime should we go if we fall under 30% tax and only claim 80C and HRA?
I would say new tax regime.
Okay. Who all are considered dependents for claiming 80DD?
Sorry, come again.
Who all are considered dependents for claiming 80DD?
So the dependent is your spouse, your children, your parents.
Okay. Next question. I have heard that we can claim ITR for gold and medical bills. Is this correct? If yes, then please tell me how to claim it.
Ritika, sorry, I didn't understand this question. Come again.
Yeah, I have heard that we can claim ITR for gold and medical bills. Is this correct? If yes, then please tell me how to claim it.
We can claim ITR. Like, I didn't get the question. Like, we can claim ITR as in.
ITR for gold and medical bills.
We cannot do this like this. Like, you are saying we can claim exemption.
Yes, I
Oh,
think
the
so.
thing is that medical bills is obviously covered under section like 80D, no, for medical expenses. There's no, like, there's nothing called gold ka wala thing. I didn't get this question, Ritika. We
Okay,
can
it's
go with
okay.
a
We can
different
move.
question. Yeah.
Sure. Is the interest from savings account also taxable?
Yes, it is taxable, but the limit is 10,000. Like, you can claim exemption up to 10,000 and rest it is taxable.
Okay. Okay, next question. Home loan taken after 2022 April does not allow for interest deduction under 80 EEA of 1,50,000. Is that correct?
Yes, it is correct.
Okay. When to submit ITR for current year?
When to submit ITR?
For current year, yes.
So you can submit like the July is the date, but you can submit before that only. Like you can submit April, May.
Okay. Can we claim both HRA and 24B, that is interest paid on home loans?
Yes, we can claim, like if we have taken a home loan, okay, and also if you are living in a rented apartment because of some of the other reasons, like the home which you have taken is like the office location is like far, so you can consider this. So that is fine. You can consider both home loan, like the home loan deductions and your HRA, but it has to be legitimate. You can consider this.
Okay. I think we have no more questions. Nikita, can you just share your email ID once again so that
Yeah,
they
it's
can
a
mail you the
CA
question?
Nikita Jindal.
You, the
I can
slide, the
type
last
it,
slide.
right? Okay,
Yeah, you
one
can type it.
just yeah, it's canikita@gmail.com. And this is my Instagram account. If you are having any questions, do reach out to me. I will reply to it directly. And for like I can see majority of the questions pertaining to the old and new tax regime. So again, you have to do your own analysis. It is something which depends on person to person, like how many deductions you are having, like what exactly you are having. I cannot answer directly which is better for you, but yeah, it depends. And you can mail me. I can help you with this. No worries.
Okay, I think we are done with the questions as well. I think we can end the webinar. So thank you so much, Nikita, for coming and addressing all the questions. We really appreciate it. Thank you for taking your time out. It was a wonderful session. Thank you so much.
Thank you, Ritika, for inviting me. And thank you all for joining this.
Thank you so much. Take care.
Thank
Bye-bye.
you. Take care. Bye-bye.